Hey guys, welcome to another video brought to you by Total Control Traders. Today we're gonna take a look at the market, some hot tickers, same as usual. So without further delay, let's get right into it. Alright, as mentioned in last week's video, since NAS is the index that's been driving the market down, we are, for the time being, we're going to start with NAS. And give me one sec. There we go. All right, so on the daily, clear bearish trend still. The bounce from Friday to today, we touched the daily 8. Technically, the candle today dragged the daily 8 down to meet with a wick, but regardless, it was a touch on the daily 8. So where are we gonna go from here? Now, with the current bear trend, let's do some projections. There are multiple different ways of talks of where the bottom could be, but remember, we're not in the market to call the bottoms or the tops, just looking at simply what are the possible scenarios. Now, first target that I'm looking at, one-to-one extension from this ABC, and then extension target one-to-one is right on the bottom of this previous key zone, where we can see rejection, support, and our bounce from Friday begun at the top end of the key zone, which worked out perfectly. Now from here, I would imagine another stall right around there, which also lines up with the GP of, if you were to retrace it from the beginning of the November move to the high of 13,909. So triple confluence right around that lower trend line as well. Quadruple confluence would anticipate, if in the after hours today and pre-market tomorrow, going into tomorrow, if we're to see coming down to this area, would anticipate a bounce from here. However, now something to note. Let's go over some of the theories that other people are talking about out there. Some people are calling that this area right here is very similar to the pandemic move so far. And 1, 2, 3, so right there. And what's the reason for that? So let's do a side-by-side comparison here. We'll zoom into here. NAS, that's about right. Let's go there. All right. Nope. Gonna shrink it a little bit. There we go. All right. So as a lot of you may have heard, when it comes to trading, when it comes to stock markets, history tends to repeat itself. Now, when we look at this chart, one big drop followed by a bounce, one big drop followed by a bounce, then 3 red candles followed by another bounce, 3 red candles followed by another bounce, 1 single green candle followed by 2 red candles. So what that means is today has played out in that single red candle so far. Tomorrow will need to be a red candle, a bigger red candle making new lows in order for this theory to play out, to confirm. Okay, now if it's based on that theory, first drop was 16%, bounce was 10, second drop 13, and first drop on this one was 8%, roughly 9, 5%, so another half, and 8% over half. So the theory is that the current drop is 50% of the pandemic drop, meaning from today's drop, from the high of today to the low of pandemic, that's another 20% drop, which would bring us roughly about 10%, 10 to 11%, bringing us to 13 or 11,381-ish, 11,380 we'll call it. Now let's go back to the main chart, 11,380, right? Let's remove this. And we will remove this. So if we were to come down to 11,380, does it line up with anything? 11,380. nothing in particular that stands out. It's right in the middle of the choppy zone. So like right here, there's no clear support and resistance. So personal anticipation is that theory. The chance of it working out exactly to the 50% on this next drop before the bottom being in is somewhat unlikely because it doesn't line up with anything. So again, first target, we are looking at 12092.8, that 1-to-1 extension target. The 11380 mark, let's make a mark of it. How would I do this? Let's do 11. Wait, did we look at the wrong price point? I think no, we didn't. 11380K. So let's say somewhere around there. We'll make it red for pandemic trend line, and let's also make it a note of it. Pandemic projection. Good enough. So that is based on the 50% move theory. Now, I got another theory aside from this 1-to-1 extension, potential bounce from here, as well as aside from this 50% move of the pandemic move. Now, if we were to look at the monthly chart, again, chart's messy, meaning less trades. Yeah, meaning less trades, and focus on your tickers that are strong. So how can I clean this up? Yeah, the only two things I can think of to clean up, probably those. All right. So another theory that I have that I was just looking at, this essentially right now is a monthly bear divergence now, meaning will take months to correct. This being 1 to the second month, there's likely going to be a third month. Now, if that is the case, 1, 2, okay. So if that's the case, worst case scenario, think about it this way, okay? The 0.382 since the pandemic move brings us to one of the previous key zones where we can see resistance here and then support, triple support, this being one of the key zones, which also lines up with the Biden line. The previous Biden line, election line, somehow not showing the price point. But anyways, somewhere around that 11,000 mark. But if you were to think about the general moves, there is a possibility that we can come back all the way back to the GP. There are a lot of people talking about new lows in the market. You know, this is only essentially is still just a monthly bull flag right now. But the reason why I think that there could be a possibility of us pulling back to the GP is if you're looking at the monthly chart, these two huge upper wicks followed by a decent red candle is, aside from the pandemic times, basically unseen before. So double chopstick top followed by pullback. This is the only upper wick that I was able to find going all the way back to 2003, as far back as the chart goes. You don't see any, like, especially at the top, no huge upper wicks, no huge upper wicks, no big upper wicks here either, and one upper wick. But as you can see, market is made to go up over time. Market is meant the way they're structured is they're meant to go up. Regardless, even if we were to pull back to the GP area, back test to this previous high before pandemic crash, market is still considered bullish. On the monthly chart, as long as the reversal on or before GP, generally that is bullish. So there is a chance, especially seeing these chopstick tops with confirmation pulling back this month in March, there is a chance that we will revisit the previous all-time high pre-pandemic, which lines up with the GP. Now, if we were to, bear with me, let me get my 2 trend lines back. There we go. So if we're to look at the zoomed in time frames. So first is this one, the Biden line, close to the 0.382. We can see on the daily previous rejections. 1, 2, multiple rejections, multiple supports, then more supports back here. So this is a clear key zone, potential for a bounce here. I like this area a lot better versus this pandemic projection. And if this area were to be lost, you can see there's not any big key zones until you come all the way back down to pre-pandemic times, where there's rejection, broke out, broke down right after, rejection again, multiple rejections here, and then became support with a back test, which lines up with the GP. So that's one theory. Okay, that's the third bear thesis. Potential, that's how much we can drop. Keep that in mind if you're playing bulls. This, to me right now, this 1-to-1 extension, which lining up with GP and key zone, is a must hold zone. The last must hold before I would consider going bearish. Today, so far, we are seeing a bounce. We are a little bit extended from the daily 8. Little bit, not too far. Would be ideal if we come down to this 1-to-1. That would be an ideal entry for today. But it looks like market wants to bounce it after hours, trading over the hourly 8 right now. Anyways, so that's the thesis on bear thesis on NAS. The other way to look at it are the bull thesis. So NAS is still clearly weaker than SPX and Dow Jones. If we were to take a quick peek at Dow Jones, we actually made a new all-time high today before wicking back down. And now we are, yeah, the real body-wise is at new all-time high as of right now. However, on NAS, we are still weak towards that bottom of the bounce versus the top end. The bull thesis on NAS from here, what I want to see is there's multiple ways to do this. Come up to right here, rejection making a higher low somewhere around this key support before making a higher high. So that's one way. Another way is seeing how we're bouncing today. Let's say we go straight 88 right here, back test before making a higher high. So these are the bull thesis. They are a lot weaker comparing to bear thesis because the trend is in bear's favor. Okay, so keep that in mind when you're playing any trades. On SPX, this upper trend line is a lot easier to be witnessed. There's two. Today we had a breakout fake out, basically wicking just above it before coming back down. But on SPX, you can see very clearly hourly bull trend is still intact. Lower low, lower high, higher low, higher high, higher low, higher high, higher low, higher high. Okay, so on the 4 hours, we have also obtained our trend reversal. Lower low, higher high, higher low, higher high. And now this potential higher low is in again. SPX has gotten that triple bull confidence, 30-minute, hourly, 4-hour trend reversal. From here, NAS must reverse for the whole market to see decent moves. If not, focus your plays on SPX and Dow Jones. Tickers that are not trading on NAS. Those would be most ideal. Now, Dow Jones. As mentioned, new all-time high yesterday, or new all-time high today, and pullback not nearly as strong as the NAS, and now we're seeing a bounce already. So market overall, mixed bag. Make sure you play those relative strength. Today, picked up a position, just to give you guys as an example. If you're looking at most charts will be red today, except one of the positions I picked up today was BBBY. And this is a very classic pattern that lately seemed to be working out very well for me personally. And I mean, obviously there's a reason why these patterns, this one's an AB. If you look at the line chart, it's basically an ABCD pattern. So on the candlestick, it doesn't work as well because we did wick under the B. So the way ABCD works, this would be A, then the pullback, and then slight bounce, making a higher low, that's a C, and now we're seeing the D follow through. Now, if this were to play out correctly, this D follow through should make a new high. So BBBY, one of the rare charts that are green today, and you can, I would anticipate further upside to this. We did close right on that previous high resistance, but we did also close near the high of day. So chart looks great. Anyways, that was not supposed to be one of the hottest tickers, but let's now go into the hottest tickers. First one, Bitcoin. Breaking bull. Very early breaking bull. Wow. Still lack of volume. So essentially the bull flag could be more so like this. One. So this week, next week, I would anticipate a rejection somewhere up here. We do need that bull flag. Monthly is still extended. And weekly bear divergence. This is a lot stronger than the normal weekly bear divergence, how they would play out. We're already seeing a bounce. Haven't even touched that weekly 8 yet. So from here, would anticipate a little bit further downside once we touch that upper trend line. Next, Tesla. Clearly very bearish still. Closing, oh, that's a weekly chart. Closing at all-time, closing below Friday's close. Volume lacking a little bit. Daily is getting to that oversold area. We closed right on the lower trend line of the long-term channel. Lost the GP, so that is not ideal. Let's see. This wick does not make it easy. So let's do, how did it react? 1, 2, 3 before the bounce. Okay. Let's do 1, 2, 3. 1-to-1 extension now pointing to 486. Does that line up with anything? I can see that. It's very close to the key zone. It does line up with the 0.5 of the whole move since March 2020. So 486 would make sense, but ideally want a touch of this key zone at the high end of 460-ish. Tomorrow is going to be telltale sign of where this is going to go. Chart is still bearish. We're not too far extended from the 88 yet. If we're to open up lower or open up and sell off, would anticipate a bounce relatively soon, because we will start getting extended from the 88. Shorter time frames not extended yet. 30, nope. So only the 4 hours and the daily are extended. Shorter time frames are not. Gonna have to watch for that stronger sell-off, a pull away like this. How far away is this one? 20%. So if we open up lower tomorrow, 20% would bring us to right about that 486 zone. Touch of this zone, continue sell-off, touch of this zone would anticipate a bounce. Next, PLTR. Still relatively weak. We saw a slight break of the 88 before rejection coming down. Essentially, these two biggest bull volume candle volume ever is still in play, just taking a lot longer than anticipated. We do not want to lose Friday's low, 2018. So call it $20 even. That is a must hold, or else I would consider these two invalidated. Next, XOM. What a beautiful backtest. We broke over the upper trend line of the channel since October, and today immediate backtest with a bounce from the backtest. Chart looks great for continuation. Next, FSR. Still holding that GP, getting walked down by the 88, low bear volume. I like this. I didn't pick a position today, but would consider it going into tomorrow, Wednesday. If we see even lower bear volume, would consider picking up a position. This chart is setting up very nicely. As long as it's GP hold on low bear volume, would anticipate another leg up. And on the next leg up, so we rejected from the 1-to-1 basically perfectly, except for a big upper wick just to overshoot it. On the next leg up, anticipation is similar idea, 1-to-1 extension target, bringing us up to the 35 area. FSR remaining on top watch. And last but not least, the hottest tickers, Wayfair. Okay, I lost sight of this. Not an ideal close. We saw nice follow through after the bounce from the trend line. Nice follow through today, but then followed by big upper wick. Volume's not concerning. Bears are still nowhere to be found. Would anticipate further upside. Remember guys, this is a monthly bull flag play. It will take a few months for this play out. At this, a lot of people are in the chat room thinking that it has already ran. And yes, it has ran a little bit. You know, you could have gone in. Of course, you can never nail the bottom, but you can say that you could have gotten here, you could have gotten here kind of thing. But, you know, this is only, if you look at the monthly, this is only the beginning of the move. The projection based on the fib extension of the low of pandemic to the high of the run to the higher low of the touch of the monthly 8, you're looking at 550 for 1-to-1 extension. So this is going to take a long time for this to play out, but upside potential huge. Don't lose track of Wayfair. And that's it for the hottest tickers. Let's look at the top watches. Actually, let's go through the requested first. CGX. I'm just going to add one more onto the top watch. All right, CGX. Monthly potential reversal. Weekly is already reversed. Inverse head and shoulders. No inverse head and shoulders. Huge gap up. Huge gap ahead. So daily trend is favoring bulls on this. Recovery plays, vaccine plays, they are seeing lots of bull action. Oil, airlines, cruise ships, entertainment, those should be your top plays lately. Anything that's, as mentioned, not traded on NAS. NAS is clear bearish still. So on here, we can see a breakout come to backtest the key zone 2 times before the continuation. Projection. One-to-one extension is coming up, so keep that in mind. Which also lines up with this gap down. Would anticipate some sort of reaction there, but vaccine plays are strong. We could very well just blow right through this, fill the gap before seeing a reaction. Chart is still strong. Daily is overbought. No clear divergences yet. We could very well just grind along here, and the chart price action keeps on grinding up. Not an ideal spot to buy anymore because we have moved quite a bit. From $4 to 14. But yeah, keep it on your watch. Daily 8 doesn't seem to be a good guide. Weekly 8 is your guide. Have not lost it ever since the beginning of this. Ever since we got over it, basically. Have not lost the weekly 8. Alright, next is Air Canada. Coming up to the upper end of the key zone where we rejected last time, right underneath it, 28.24. We're 32 cents away from previous high. Inverse head and shoulders playing out very nicely. Nothing too notable on the volume. No notable divergences either. With how far we have ran so far, would anticipate a little bit of a stall right at that top end. Wow, already blasted through all the fib extension. So the next one-to-one extension target is at 29.90. So we could very well just blast through this resistance key zone. Did close near the high of day. Would anticipate a stall around 33. No reason for sell yet. No reason for sell yet. Daily 8 is your guide. Next, IMAX. So another vaccine play. Seemed to be a lot stronger than the previous 2 that we have viewed. It's already recovered to higher than pre-pandemic. Come on. Okay, you know what? Let's do a weekly. Okay, so constant rejection. Works even better. Multiple rejections. Then we broke out, backtest. So we use the most recent one, backtest. And now continuation. Huge bull volume on the weekly. This looks nice. We are overbought. So what's likely to happen from here, we are extended from the weekly 8 as well. What's likely to happen here is we're either going to form a bull flag or make a new high, form a divergence before a pullback. Right now, chart is overbought, likely to stall a little bit from here. Let's see what the FIP extension tells us. Already passed that 1-to-1 extension. All right, next, APHA. Nothing exciting yet. So I was looking at this chart today, thinking of buying it, but then volume was not there. Neither bulls or bears. You look at today's, this is today? No, this is last. So today's volume, 730, clearly lower than last Friday's. There was no volume buying up, and then this clear descending, decreasing volume, followed by a slight increasing on bear volume, but very unnoticeable because it's very low. However, there is no reason to be in this play yet because we're in a very clear channel. Bounce, opened under, got bought up, bounce again, rejection, bounce, rejection, bounce, potentially seeing a rejection again. So right now the hourly is 4 hours, 30 minutes. Okay, hourly just ever so slightly lost that bull flag pattern, stall on the hourly 8, broke over, and now we're breaking down under. Be patient on this. And don't worry, I will be in this play, APHA. Just gotta find that right entry. You could consider playing it from here for the chance of going up, but right now you're in the middle of nowhere, no man's land. Why trade here? No, you can find a better entry. We drew this channel before we touched the bottom on Friday, so that could have very well been your amazing entry. 2, 3, 4. Yeah, that would have been the perfect entry on Friday. If you missed it, be patient on your entry. Market, remember, Nas is still bearish, dragging the market down. Even though SPX and Dow Jones have both trend reversed, but as long as Nas weak, overall market will not see decent bull price action. Next, WM, waste management. We continue running today. So we went straight past the GP. This bull divergence on the daily is playing out very strongly. Now from here, no, that is the GP. So what you could be looking at from here is a longer play on the weekly. If that is the case, 1-to-1 extension would bring you to new all-time highs. Weekly is starting to get a little bit extended, but not too far yet. Daily is still okay too. So essentially, if you're in the play right now, hourly 8 should be your guide. Wait, this is the ticker that we use 10, isn't it? $10 or 11? 11. Oh wait, no, 12, sorry. So lost it, got bought up. Almost touch, bounce. Yeah, already 12 will be your guide. Use the RD 12. It reacts a little bit better on this chart. No reason for selling yet. Chart is very strong. Next, CNR. Cornerstone? Oh, okay. chart is new in, no it is not. Okay, new lows, potential for Adam and Eve pattern, but that's usually at the top of a trend, so, or reverse. Yeah, no, yeah, so it could be a Adam and Eve pattern or a W pattern. W, you want to see the middle higher though. So on this one, I am seeing a channel on the weekly. Chart is strong. You can see that it keeps wanting to break out and then it gets rejected. If you see it close on the trend line, consider taking some profits and re-enter later. On the weekly, we are extended. So if you look at the previous times we have closed on the trend line, so this week if we're to close on the trend line, next week is red. Similar idea here. Didn't close on the trend line but wicked above the upper trend line. Then next week is red. More red, more red. Same with here. This is more so breakout, fake out. Then you saw further red. So watch for an action. You want that clear breakthrough. A break, you know, close somewhere around here, the $14, $15. Then next week you want to see ideally some more bullish action and then backtest. But right now the weekly is already a little bit extended from the weekly 8. Chances of that is a little bit slimmer. Daily volume is looking like it's going to happen. Yeah, daily volume actually looks better than last time it popped. Watch for the volume tomorrow. There is a bear divergence forming. You're going to need that volume tomorrow or for the rest of the week at least. Push it through, negate the bear divergence, pushing you away from this upper trend line. The extension on the daily 8 is the only concern I have. So if you start seeing rejection from this upper trend line, make sure to take some profits. Next is AAPL. Why do I have these two? Okay. So making new lows today on Apple. I have an alert set at 113.90. That is going to be around that 1 to 1.618 extension. Could be an ideal entry. Bottom fish play, easy stop with the support right underneath at 113.90. 1 to 1.618 is at 113.80. So somewhere around there will be a decent entry with a stop right around here. You can put it under 120. That'll be an easy low risk play. But remember, if these supports, so there's 3 supports here, 112.59, 107.32, 103.10. Each of them is really a fairly decent gap in between. So if these 3 are lost, you could potentially be looking at filling this gap from way back here. And this gap would bring you down to 96.30. Big ways to go. If you're interested in playing Apple, I would anticipate this as the last potential for bull play. If we fail to bounce from here, we'll be looking at revisiting these previous supports, followed by a potential gap fill. All right, so that's it for requested tickers. Let's get into top tickers, and then there's a few Wall Street bets I want to speed through. All right, first one, Airbnb. So decided to take profits today. We had a very decent entry from down here around the 165s, and then saw a bounce to the daily 8 and seeing a rejection from it. Didn't take the profits way up here. I actually took it after hours, so it's around the 181 mark, but still decent profit. From here, as long as we're trading under this trend line, chart remains bearish. You're gonna want to see, there's lots of wicks everywhere, so want to see a little bit more price action before determining, which would allow us to determine potential new pattern. Then from there would be an easier play. However, this was a confluence area, so didn't want to miss that. It played out well. Now let's see further price action to develop more patterns. BBBY we already covered. XOM we already covered. QS. All right, QS was interesting today. So if you look at QS, yeah, it's an ABCD pattern again, basically. Same idea, we wick down under. So, but if you look at ABCD pattern, you should be looking at it from a line chart perspective anyway. So this is an A, the first pop, followed by not too ideal of a B. Generally this would be a B, so in this case you could say this is a B, and then from here slight pop and making a C. Now let's see if we get that D follow through into the gap fill, wherever that was. There it is, 84.33. So entered very small position today. Let's see that follow through tomorrow. Next, PTON. We got news after hours about them going into, let me do a quick check here. Plans to launch in Australia, marking brand's entry to Asia Pacific region. And thank you, Wing, for sharing that. So after hours, we were trading up. I can't remember what the price was, but essentially we closed right at the GP today. No, we lost it. Yeah, we lost it a little bit. This was an interesting, so picked up some entries or added today to the PTON play due to this volume spike, 730 volume spike. It was one of the highest bull volumes we have seen, and it's the highest ever since December 21st, 2020. So that gave me a little bit of, what is going on here kind of thing. So decided to add in some plays here, and we saw low bear volumes coming in, but it just bled all the way down. Throughout the day, however, you do see more pop in bull volume, unable to push it up, letting it bleeding out, and at the end of day, bull volume came in again. So this is very interesting. Tomorrow, keep it on top watch for tomorrow. See how the reaction to the news is. Make sure, be patient on the first 15, give it 15-30 minutes first to see what the reaction is. If we were looking at the after hours, it's not giving me real data, but after hours is trading up around 103.50. Not a whole lot of bear action based on the news. So let's see what happens to it tomorrow. Next, OZON. It held up decently. Did I look at this wrong? Oh, I must have been looking at a wrong chart today then. Had a wrong OZON pulled up. I was wondering why it wasn't moving the whole day. Is this right? OZON. What was I looking at then? OZON. No. Weird. I'm gonna have to check. It's on the other computer. Anyway, so OZON, bearish. Decent volume. Big bull divergence forming. Now the problem is we're gonna need to see where this bottoms out. So let's try to do a projection. Ooh, not looking too good. This would have been the ideal entry area, but we just blasted right past it. GP confluence with previous high. Minimal support down below. chart's not looking so great. We are getting extended from the 88, so there will be a bounce play. And this bounce, when it starts, whenever it does want to start, it can be very glorious because of the daily bull divergence, strong bull divergence that has now formed. So keep OZON on your top watch. If you're a scalper, keep it on your social watch. If you're a swing trader, there can be a trade in here. Strong bull divergence. I like this. All right, next is, let's delete this. Next few, we're going to take a quick look. Nothing notable. Bounce, rejection on beam. No notable volume. Gonna need to find the bottom and the reversal before playing this ticker. Similar with TDOC, being patient on this one. This one should pay really well once it does want to pay, but we're just about to negate this bull divergence that we have right now. As soon as we make new lows, if we were to revisit this trend line alongside the key zone, that could be an ideal entry, but it would negate the bull divergence. Daily is already in the oversold territory. We are extended from a 88. There's a play here, but watch for the reversal. Chart remains weak. 1, 2, 3, 4. That's 9 red candles in a row. Next, AMD. Just getting slaughtered. So gap fill coming up at 71.63. We are right at the top of the previous support. Based on the chart, would anticipate a gap fill. There could be a play in here, whether it's a bounce or not seeing any potential for swing trade here. Likely just a bounce play. Watch for the gap fill if you are a scalper. All right, that's it for the top watches. Next, WSB. So first, of course, GME. Big pop today. Funny thing is, we played it from either the 24th. 24th, the beginning of the day was our entry. Bought an option for 200 call for April 16th. Still a month away, more than a month away, for $200. $200 call. And that was trading at $5. And now it is trading at, I think, somewhere around 90. So bought one, sold the next day for double. Oh no, sold the same day for double. And then sold the next one for next day for 9 times. But now it is, what is that, 18 times? 18 times the original principal. The plan was to hold one of them. And I don't know, this big red candle is just, you might as well take profits. But it was a free ride. So sometimes it goes to show, stick to your plan. The gap fill is, the gap is nearly filled, $3 off. Today's high is 210.87 and the gap is at 213.07. This chart has potential to continue running. And I'm looking at this, it's similar as the BBB, the Bed Bath and Beyond play. We're looking at a candle right here right now. There's potential for continuation. So essentially this one is a B making a C now, and then there's a D that could go into new all-time highs. Okay, ABCD pattern, understand how they work. Okay, make sure you understand how they work. There is a chance that GME goes to new all-time highs. If that does happen, might not be so good for the market. Next, AMC. Similar idea, ABCD pattern. Now seeing the beginning of a follow through. This is a lagger play to GME. There is potential for a very decent play from here. watch for tomorrow's follow through. Earnings, however, is coming up March 10th. That could hinder the move a little bit more. Whereas GME, not for some time. Next. 1, 2, 3, 4. 2, 3, 4. 4 more tickers we're going to go through. First one, free. So similar, Wall Street bets. This one has been popping. Not price action wise, but talk wise. Wall Street bet score wise, I should say. Not seeing a clear pattern here. Potential for a head and shoulders. Doesn't look too interesting to me. Bear divergence on the daily. Potential for head and shoulders. So we will revisit this. But as the way it stands right now, doesn't look too interesting for me. Next is ANY, Annie. Annie. Held the key zone. Well, lost a little bit, but now we are seeing a huge bounce, bringing us right over that 88. Okay, so this one is kind of interesting because we have huge bull volume pop. Wow. The biggest bull volume. Look at this. Followed by, so this is the first pop, then a huge bull volume pop, then another 2. So chart is extremely strong, likely to look for further upside. Free, keep it on watch. When that goes, it really goes. $1 to $8, 33 cents to 5.50, $1.23 to 4.49, and this move could potentially not be done yet. So there is more potential for upside on this chart. RSI is now cooled down. Price action justifies for further upside. Keep your eyes on any. And the last 2 space. Okay, not too interesting. There is a play in here. Scalp play. We are extended from the 88. Bear volumes falling off. Daily is still not oversold yet, but there will be a bounce play. This was the most ideal entry right at the lower end of the key zone. From here, let's see if we revisit that. But regardless, there's a bounce to play to the 88 here. Next, last but not least, VER. Channel. Not exactly a clear channel. Potential for head and shoulders. No divergences. Not seeing too much of a clear pattern here. It's just a slow grind up, it seems. Yeah, not a chart that particularly interests me. Anyways, so that's it for today's video. Relatively longer than the usual weekday videos. And don't forget to give a thumbs up if you enjoyed the content. If you're looking to build that pot of gold and enjoy the content that we provide on our videos, please consider subscribing to our channel where we provide new videos daily. Also, check out our website at totalcontroltraders.com. We offer 7-day free trials to our chatting platform where trading ideas are shared, charts are reviewed, as well as questions, coaching are provided. Hope you guys stay safe and be in control. Thanks for watching. I will see you guys in the next video.